About Netweb Technologies now, saw strong revenue growth in Q1. Margins improved sequentially. AI workstation segments saw 300% growth on a YOY basis. Sanjay Lodha, who is the chairman and MD at the company, is joining us now. The stock is up 11.5% as we speak. Let's talk about the guidance going forward in that case. Mr. Lodha, good morning. Thank you so much for joining in. Strong growth in revenues, almost doubled on a YOY basis, and the AI segment did really well. What's your guidance for FY26 in terms of growth and in terms of segments, which will be the segments that will drive the growth that you'll see in FY26?
Thank you. Thanks for your time. So basically, it has been a very, very robust quarter for us. As you know, basically from the very beginning, the company is somewhere around 25 years old. Our focus has been into the high-end computing area actually. And we have been focusing on Make in India and developing and trying to do the hardware design, manufacturing, and even the software and the services, everything in India. So that is definitely, we have developed the all kind of skill sets over a period of time over the past few years. And that is actually helping us so as to basically help us grow and to keep our growth momentum on. The other thing which is very important for us is basically the focus, the niche focus which we have. The three areas we work upon. The first is the supercomputing, that HPC, and that we have been doing for 20 plus years. So that is around 25%, that is around 35% of our business. Private cloud and HCI is another 35% of our business. The AI segment is a bit surprised this time because AI segment used to be around 7% of our business 2 years back, but now it became around 15% of the business. In this quarter, we are seeing it around 29% of the business. But really speaking, the kind of, if you see, since we got listed, this is the 9th quarter result which I presented. We have shown a consistent growth of 40% CAGR plus actually across all the quarters without any fail actually. And I will remain to guide at the same level that basically we'll keep on growing at the same momentum. And because the business is highly predictable. As regards AI is concerned, definitely this quarter we had a very large deal. That's the reason you might be seeing a small kind of a spot there. But I personally would like to guide that 20% or 22% kind of a basically share in my total business for the AI segment. Because the other two segments are also very growth segments. They're also growing very well.
Got that. So AI revenue contribution of 29% in the current quarter was caused by a one-time spike, a large deal. But you expect AI contribution to settle around 22 to 23% for this year, correct?
Yeah, I used to guide it around 20%, but now I'd like to increase my guidance there to 22% on their total revenue because my other segments are also equally growing. You know, you see the data center is growing, the private cloud market is growing, the HPC LSM 2.0 is already out. So basically that's all there. Thank you.
Yeah. So since you've increased the guidance on the AI contribution from 20 to 22%, why not on the margins? On EBITDA, you had guided for 13 to 14%. But this quarter, you've done EBITDA margins of 17.7%. So you've beaten the guidance significantly. So what's the new EBITDA guidance? And even on net profit, what would your guidance be? And again, I know we ask you this every time, but after a 100% jump in revenue, why not raise the revenue forecast? Why are you still holding on to that 35-40% kind of a revenue run rate?
Actually, in the current situation, basically this business, as you know, this is completely focused into enterprise and high-end government actually. 50% of business comes from government, 50% of business comes from high-end enterprise. All large customers primarily we focus upon. All the large customers depend on their production workload for us. As regards operating EBITDA, it was around 14.9% this year, while it was basically around 13.2% last year-on-year basis. So definitely EBITDA has slightly increased. But basically, my EBITDA guidance will be around 14% only. I'd like to keep it around that because basically we are seeing the growth momentum and basically we want to price our products very, very reasonably so that basically people are able to take the value for money. Since basically all our customers are long-term customers, we have a very good repeat customer base. So we don't want to overcharge our customers. So we will the EBITDA guidance, which I will like to operating EBITDA guidance, I like to keep it at 14% only, ma'am. And as regards the PAT also, my guidance will be between 10 and 10.5% approximately. We like to maintain that as well.
Mr. Lodha, what about your order book position? Your order book has come down compared to last year. And if I'm correct, that might be because of the fact that you're executing orders quickly. But what about replenishing the order book? What the kind of pipeline you have currently, that has gone up. But how much of that is likely to translate into orders going forward? What's your order? What kind of order book growth are you envisaging for this year?
Yeah, so basically our kind of business really, I think this is the first time I'm talking to you maybe. So basically, our kind of business cannot be just from the order book kind of thing, because our order book cycle is very short for us. Order basically gets executed between 8 to 12 weeks actually. So basically we are a funnel driven company, but if you really see the L1, where basically we are already we have won the order, but the purchase order is yet to come. So that is 100% sure kind of a situation. So basically if you add 464 crores and 229 crores, so that is somewhere around odd 600 plus crores actually. So that is kind of order book which we have. So in totality, the order book has not gone down. It's up only, and our funnel is also going up, as basically we are proactive sellers. As I have been telling, we are not reactive. That basically any tender is there, any RFQ is there, we just bid for it. We primarily basically define and devise our solutions around that. So basically it takes us around 3 months to 6 months to work on projects. So that takes basically the funnel closure time is also long. So that's basically, this funnel actually gives me the confidence that I'll keep on growing at the 40% CAGR, which I have been telling you, and we have been performing quarter on quarter.
All right, Mr. Lodha, take that point. Thank you so much for joining us, sounding confident about the future growth prospects as well after a stellar performance in Q1. That's the word coming in from Netweb Technologies. The stock, though, has come off from the highs since the time we had that conversation. But we'll slip into a break. A reminder for our viewers, unlock a world of exclusivity, expertise and influence. Become a member of CNBC TV 18 Access. Our premium members only experience on CNBCTV18.com. The membership includes access to CNBC TV 18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and masterclasses, and curated lifestyle benefits.